Welcome to the Quarters Collective podcast, New York Tech Week series, presented by the Front Yard at Pace University. Together, we are here with
Max Juang.
Max. It's a pleasure to have you here.
It's a pleasure to be here. Thank you for having me.
Max, you have such an array of backgrounds. Coming out of college, you worked for Hilton Group, and now you work at Stock Story. Can you give us a little bit more insight of your background and what you do right now?
Yeah, definitely. So maybe if I could rewind even before Hilton. So the reason I'm here is because I love investing in stocks. And I really started my journey back in 2017 when I was still in college, learning about how different stocks work, how things traded, stuff such as that. And then, fast forward a few years, I knew I was really interested in investing, but wasn't exactly sure where to go. While you're in school, people talk about public stocks, private equity, real estate. And that's when I decided to join the Hilton Foundation coming out of school. It was a very unique opportunity because the way that the group invested is we allocated money to asset managers in various different asset classes. So we were the investors or the LPs in hedge funds, private equity funds, real estate funds. And I think it was a very unique opportunity as a 21-year-old who knows absolutely nothing about the markets to immediately come in and be able to get in front of some of the best and the smartest money managers of the world, understand their thought process, what they look for in investments, and really just get to dive into their psychology and then ultimately pick and choose what resonates best with you in order to form your own psychology, investment philosophy.
And how has your journey coming out of NYU at 21, working at Hilton to a few other companies, how has that shaped your personal approach to investing and throughout the years?
Yeah, so I think I always knew that I was very interested in stocks. And I think my experience at Hilton really just solidified how much I love them. For example, one of the reasons why I love stocks so much is because it's so accessible to anyone, right? If you're in private equity or if you're in real estate, you need to be in the know. You need to be able to form a transaction. You need to be able to pitch someone, sell someone, legal documents, the whole 10 yards, right? Whereas in stocks, as long as you approach things with rationality and you do your research, all you have to do is press a button. So it's infinitely accessible to anyone with a computer and an internet connection. And I think that's really something that's very special about it. And especially for someone as me who doesn't have the resources as maybe someone who's very senior and who's built up a network, you're able to play in the markets.
And so, where did your interest in public markets come from?
Yeah, it's actually very interesting. So I believe it started all the way back in high school when I had a few $100s and just had no idea what to do with it. My father told me, I should check out the stock market. So bought a few shares of Nike. I had absolutely no idea why I bought the company. Actually, the reason I bought it is because I played baseball during high school and college. And my favorite apparel was always the Nike arm sleeves and the Nike undershirts. So that's the reason I bought it. Over the upcoming years, was really able to hone the investment philosophy. And now I still invest in companies and brands that I really love and resonate with me. But now I have the understanding, of how to analyze cash flows, how to analyze competitive moats, how to analyze management teams, things such as that are very important in forming a holistic view.
And so back in the day, you were using Nike, hence you were interested in potentially investing in them. So how has your investment research process shifted, or how have you grown to learn more along the years?
Yeah, so maybe this is a very good time to talk about, the various teachers that I've had in my life. I've obviously had the people who I've worked with, but I think what's also great is that so many of these legendary investors have put out books and so much content in YouTube and interviews that you can really learn from, and all of the content's freely available. So I think my first step after, identifying the company or the brand that I liked was reading into Peter Lynch. And Peter Lynch, he's a great investor. He ran the Fidelity Magellan Fund from 1980 to 1990. He put up 30% annualized returns a year.
Wow.
And his whole philosophy was use what you know as a retail investor because you know the trends before the institutional investors understand them. Use that to your advantage and then figure out from there if the company has a healthy balance sheet and then figure out if the price is right. And if you can do those three things, then you're probably going to succeed. So I would say that formed the first layer of my investment philosophy. Now, the second layer of the investment philosophy, I would say, came after doing a bit more studying. This was right after college, in the middle of my experience at Hilton, a man named Philip Fisher. So Philip Fisher, very astute investor. He was during the 60s, and he was unofficially known as the first growth investor. He's actually, Warren Buffett says that he borrows a lot of his investment philosophy from him. And essentially what he is all about is, okay, find the company that's on the leading edge of technology, figure out how strong their management team is, figure out how strong their research and development functions are, figure out how strong their sales and marketing functions are. And if you can build a perpetual machine that kind of creates itself, then that's how you create a competitive moat. And that's how you create long lasting value and, compounding returns.
So if we're thinking about all of these different sources that have came into your life, right? I'm also interested in how this reacts to the current landscape of AI and the vast amount of publicly available information that we all have available to ourselves, right? I'm sure that perhaps when you were just getting started, you were utilizing lessons from these books, from your teachers, maybe even from your father, and then trying to bring it out into the world in the best way that you could. However, now we have the entire encyclopedia of world history, right, available to us in approximately 12 seconds, right? And so I'm just very curious to ask, like, what does your investment research process look like today? And is AI a part of it at all?
AI is definitely a part of it. Maybe I can get to that a bit after, but to your point on how there's so much information out there in the world, I think there's too much information out there in the world. I think it's very important for people to focus on what's important to that specific investment at that time and kind of shut out all of the other noise. So going to my investment process, what I like to do is it's typically very structured. So first and foremost, what I look for in a company is if it has a sound business model, right? That's number one. If it doesn't, it's automatically killed. So the way I do that is I go through the 10K, I read it cover to cover. If you do that enough times, you'll be able to have pattern recognition for, okay, does this company, is it an entrenched player? Do other companies, would they go out of business if this company disappeared? What enables them to keep their profit margins and potentially increase their profit margins in the future, right? How much of their revenue is recurring? Those are kind of all of the questions that I ask in that initial stage. And then if it fails on any of them, it's immediately out. If it passes that stage, right, that's the core, then it's about the strategy and how they're executing and what the growth is, right? Because you can't have growth unless you have a strong core. Where the growth comes from is then I'll read the investor presentation, which is publicly online. It's on their website. That gives you a sense of what management is focused on. From there, I typically read the last 2 years of earnings calls transcripts and investment conference transcripts. And what that gives you an idea of is how they are executing on that strategy that they have laid out. Have they been consistent? Have they pivoted? Where have they messed up? Where have they fixed things? It gives you a very good sense of the execution on the growth. After that, what I like to do is, kind of in formats such as this, listen to as many YouTube videos, as many interviews, as many podcasts as possible. Because when you're investing in a company, ultimately what you're investing in is you're investing in people. And if you can't align yourself with the people, or you don't think the people are up to your standards, then that is an automatic kill, right? Because if I'm going to invest $100 into someone, I'm essentially giving that person my capital, and I need to make sure that they have high integrity. Hopefully they're a lot smarter than me and they know what they're doing and are very focused. After that, then it goes into the customer side of things. So this requires a little bit more resources. It's not necessarily available to everyone, but there's a few software platforms out there. One that I really like is called AlphaSense, where they have expert transcripts. So they'll have other investors interviewing customers, former employees, things such as that. And then you'll be able to read these transcripts and you'll be able to form a holistic picture on the company. However, it's not just enough to understand the company in a silo, right? Because the company operates in an entire value chain. And to truly understand how the company is competitively positioned, who can come eat their lunch, whose lunch they can go eat, how that's going to affect margins, how that's going to affect growth, you have to understand the entire landscape. So then what I'll do is I'll repeat that entire process for every single competitor in the ecosystem. And then from there, sometimes in the initial stage, I'll like the company, but then after doing that, I'll say, wait, this company is actually better positioned. And this company, if it wanted to, change its strategy all of a second, it could totally come and eat this company up and this company would disappear, right? So I think that's the second stage where you decide to kill things. And then if it makes it over those two hurdles, then it goes on to the alternative stuff, which I would say is going on to Glassdoor, reading the interviews and the reviews of the CEO and how the company culture is. See if it's healthy, watch the product demos on YouTube, really get ingrained and put yourself into the customer's shoes. Because I truly think that if you can't think of the company through that lens of a customer, then you're never going to understand the company. And then after that, the very last stage is reading sell-side research. So, Goldman Sachs, Morgan Stanley, all the great investment banking houses, they'll put out research, but I think it's very important to read that last because you want to have your own independent opinion with no biases, maybe your personal biases, but as few biases as possible. And then once you come to that conclusion, then you can compare it to what the market believes. And then depending on how differentiated you are from the market, then that informs your position sizing. And if you want to swing really big, if you want to swing small, or maybe if it's not interesting at all.
In the macro sense, you can't really talk about stock markets unless you talk about the retail markets in recent years, especially during COVID with Robinhood and whatnot. You said you started getting interest into stocks in high school. How have you seen the retail market change with, the GameStop thing and whatnot? What's your take on that?
I think it's wonderful what is happening. And I think Robinhood has played an integral part in that. And I tip my hat to them for doing what they've done. Obviously I wasn't around in the 1980s and, the roaring 20s and the nifty 50 in the 1960s and 70s. But yeah, it seems like everyone in our generation is currently, I was talking about stocks or investing in stocks.
Yep.
I think that's great. I think A, it makes everything more competitive. B, everyone has recognized that there is this insane wealth generation tool that is available at their fingertips. And
Literally.
as long as they do the research, stick within what they know, they can make some very healthy returns and hopefully accelerate retirement, things such as that.
So, but there's a lot of BS sources that are out there, right? Or a lot of think boys, TikTok investors, that are just spewing absolute BS and also just spewing things that are just it's not even legal actually to give financial advice like that, especially if you're compelling people to do something and you have some involvement. That was an issue with a lot of these tokens. That's crypto Web3. We'll stay away from that. But I am just curious, what makes good, media with regard to finance and public markets for you, right? What do you look for to ensure that what you're seeing, what you're reading is not BS?
That's a great question. I think a lot of it, first off, I would say about the majority, probably 75% of my knowledge comes from things that are directly from the company, right? So these are publicly listed statements. You always have to take them with a grain of salt, but I do feel like you can trust them to a degree, trust and verify, right? In terms of how to interpret all of this alternative media, like the TikTok influencers, the Instagram influencers, what I bucket that into, it's part of my research process, but rather than the company, part of the company research, I bucket that more into market research. So we talked about my investment process for analyzing the company. I also have a process for analyzing where we are in the market cycle, which I think is very important because I have a concept of, I try to split my portfolio into a barbell of growth stocks and defensive stocks. And then based on where we are in the market cycle, if everyone is super happy and there are a million TikTok influencers telling you to buy things, there's probably irrational exuberance in the market. And when there's irrational exuberance, you probably want to play some defense. Whereas if all of a sudden I'm looking on my Instagram or my TikTok and no one is saying anything, I probably want to be on offense, right? Obviously, you have to tie that into the valuation as well, but typically valuations follow investor psychology. Obviously earnings as well, but I think Howard Marks, who runs Oak Tree Capital Management, actually writes a great piece on this in his book called Mastering the Market Cycle, which I recommend everyone should read. Yeah, that's the key piece. And I think it's very important to take that into consideration.
So TikTok investors are the new cab drivers.
Yes, exactly. It's still important to listen to the cab drivers too, and your bond.
So we are in Tech Week. So in light of Tech Week, how has the AI landscape influenced your ability to do research and kind of suss out the BS basically?
Absolutely. No, I'm happy to go into this. And this is very funny that you asked this question because over the last 2 months, I had been working on prompts to essentially automate analysis for me. What's been particularly helpful is I've tried out all of the different LLMs, Claude, ChatGPT, Gemini. And essentially what I've been doing is rather than reading, I still read the 10K front to cover, but that's a very long process. Some of these things are like hundreds of pages.
Yeah.
What I started doing is I started feeding the 10K PDF into ChatGPT, and I will attach like a 40 to 50 page prompt, essentially saying, this is my investment process. This is what I look for in companies. This is my target holding period, which is ideally to never sell. And then I attach example research reports that I've written independently as a pre-structure such as this. And then I click go. It runs for about an hour, which is a very long time, but the output is actually phenomenal. And I find that that is a very good first cut. So what I started doing is I'll read that initial report that comes out. It's about 30 to 40 pages. If I think it's interesting off of that, then that'll kick off my entire research process of the 10K. Now, another thing that I've been doing, which is very interesting, is earnings call transcripts. During earnings season, my investment universe is about 50 to 75 names. That's a lot of companies every quarter. All these earnings call transcripts are typically 10 to 15 pages. So what I've done too is I'll now upload the earnings call transcript into ChatGPT. Again, I'll do the exact same thing, lay out the examples. Took a prompt engineering course with Google AI, so thank you very much for that. And then, it spits out a very nice summary of the earnings call. And then, if you look through that and you have additional follow-up questions, that's when I'll go ahead and read the entire earnings call transcript.
Gotcha. And so there are so many tools that I can think of here. I mean, I could picture myself even putting like all 50 to 70 transcripts and just trying to analyze everything all at once. My ChatGPT now has deep research, right?
Mm-hmm.
So that can handle a crap ton of data, right? That would not be possible if it wasn't for these new tools that they keep improving. Another thing I can think of, I don't know if you've ever used Notebook LM, but being able to put that in, it's a Google tool, and then it can generate a custom podcast for you. So there's just that one is incredible. Like whenever I need to learn something fast, as you can see, we love podcasts. That's why we we make them. But whenever I need to learn something, like the Notebook LM tool, just hearing these two voices, which sounds so human, by the way. It's a man and a woman, and just incredible. It's a lot of fun to listen to them. I think that honestly, there's just so many tools available, and I'm glad to hear that you're using them. I think initially when you started talking, you were mentioning all the old books. I was like, okay, maybe he's just like an old school investor, for sure. He's, he went to Omaha, but no, you're utilizing both. And I think it's important as well to emphasize that there is that background, right? Like there is that necessary step to know what the greats have done before any of this technology existed. And then you always talk to your advantage as your next step.
Yeah, no, absolutely. I'll definitely have to check that notebook out. But I think it's critical for anyone, before they go out and start investing real dollars that are very impactful and meaningful to you. I think you have to build your core. It's just like a company. If you don't have your core business model, your core investment philosophy, you're going to get pulled into a million different directions. You're going to start listening to TikTok influencers. You're going to start listening to whatever Jim Cramer or someone else has to say. And your mind's just going to be an absolute mess. And I think the ultimate test of when you buy something is you have to know exactly what you are going to do if that stock dropped 50% tomorrow. If I am not excited that the stock drops 50% tomorrow, I either don't know enough about the company or I shouldn't be investing.
You're saying that, it would be you should buy, right? You should very obviously buy if this is down 50% on the day.
Yes, exactly. And I think you can only really do that if you have a core investment philosophy and certain things that are fundamentally rooted in how you think.
Yeah. So we had the opportunity, you and I, to get to go to Berkshire Hathaway AGM in Omaha this past year, Warren Buffett's last year. What are some of your personal takeaways from that experience, from that journey, and potentially inspiration from the great Warren Buffett?
Yeah, no, I think Warren has been another one of my very great teachers who I've never met. Or I met him from about 50 yards away, which is pretty cool. But I think what I respect so much about Warren is his discipline, right? He is just so laser focused on exclusively investing in what he knows in, staying within his circle of competence and not straying from that whatsoever, right? He has a massive cash balance. Some could have argued that maybe, hey, why didn't he spend it during the most recent tariff drawdown? But for him, for the companies that he was analyzing, he typically analyzes defensive stocks, right? The way I describe defensive stocks is stuff that has very stable revenue, very stable cash flow. And if you look at what those stocks did during the tariff panic, they were actually like flat to up. Maybe they were down like 5% or something, but not enough for Warren to completely deplete his cash reserves, right? And swing for a fat pitch, because it wasn't a fat pitch. Maybe it was tempting for him, seeing some of these growth stocks down 30%, 40% from their highs. Maybe it's very tempting to get into that, but no, he stuck to his circle of competence. And he just kept doing it business as usual, no panic. And I think that's what I really respect about him, and something that a lot of investors can learn from.
You said Warren is a very defense stock focused investor. For those early retail investors or people who want to get into stock, what other categories and influences or teachers of different categories of investing can you explain that?
Yeah, so I would say perhaps before getting into that, maybe how I like to approach companies. So I would say my investment approach first centers upon finding the secular growth trend. And what is the secular growth trend? How do you find that? Well, you have to identify a problem that's in the world, much like a founder would identify a problem and start a company after that. And then you have to find the companies that are solving it. So that's number one. I think a person who's very helpful for that was Peter Lynch. Peter Lynch was always ahead of the secular trend. One of the funny things that he would always mention is that all his stock tips, he made a lot of money in consumer retail and savings and loan banks, which are small regional banks. In terms of the consumer retail, the way he made all of his money is he would hang out with his wife and daughter, and they would go to the mall together, and he would ask them, hey, what's the next hot store? What are you buying? What are all your friends buying, right? So he got in front of the secular trend. I'll say the second step is to then find the companies that are leading the secular trend, right? So how do you find that? The way you find that is you have to find the entrenched player who has the highest switching costs. They typically create a product that's daily use, right? If you rip the product out or the company died tomorrow, the customers would just have no idea what to do, right? Like Meta's a great example. Yeah. What happened if Meta went away tomorrow? No more Instagram, no more Facebook, no more WhatsApp. Right. We'd be back in the Stone Age. Yeah. Right? Yeah, so I would say that's number two. And then what that also gives you is if you are the entrenched player with high switching costs, you control distribution, that gives you free options out of you, right? So that gives you the ability to upsell and the ability to cross-sell without having to go spend additional money to acquire additional customers. So what does that do? Your revenue's growing, your expenses are flattish, so your margins go up. Your valuation re-rates, you get a double play. I think what I've really learned from that, where I learned that from, is Philip Fisher. And then I would say the third thing is then like excellent management team, right? You can only partner with people that are very high quality, because the reality of business is business moves so fast. You're going to have to pivot. You're going to have to create new products. I think where I really learned that from is Warren. And because Warren is all about management alignment, right? So I think those are three great teachers. And I think if you overlay that with how you think about the market and the broader cycle, the credit spreads, the credit window, I would say a great teacher there is Howard Marks. It's kind of like you have the three horsemen of Lynch for the trend, you have Buffett for defensive stocks and management alignment, and you have Philip Fisher for growth stocks. And you kind of have the archangel of Howard Marks looking all over them saying, okay, at this time in the market, you should be a Fisher. At this time in the market, you should be a Buffett. And then you have Peter Lynch saying this is a secular trend. So I think those are four very, very great teachers that I'm grateful for.
Thank you for that robust examples, those robust set of examples. Honestly, that was incredibly helpful, and I could just see how much knowledge you had about the markets. I did want to maybe push back a bit on the entrenched point. Thinking about some like you mentioned the Meta example, right? Of like thinking just about how entrenched some of these products that we use are. However, it just made me think about Google, right? And how Google search volume has just, I mean, nobody could have anticipated how much it would decrease based from ChatGPT, right? When ChatGPT started, it was a nice little tool. You sent some funny stories in your group chat, whatever. It is now a default search engine for a lot of people. I know, especially in reorganized world when we connect with VCs, tech people. I mean, the default search engine on their phones now is being set to just going to ChatGPT.com and being able to ask that way. And we even heard a new term pop up recently at a panel that we hosted on Monday, which was GEO, generative engine optimization, right? So like, there's not just the product of Google search, right? But the entire landscape of services that Google and Alphabet, its parent company, was able to benefit from that can go away. It wasn't overnight. So I just wanted to, maybe ask a little bit more on, even for those entrenched players, right? Like Meta and something like Google that felt so entrenched, they're still never really safe, right?
And I completely agree with you. And I think that's where the management team comes in. That's why I respect Mark Zuckerberg so much, because he has that entrenched position. You can always lose the entrenched position, right? If a new technology comes out. One of the reasons why I reference Meta is Mark is not afraid to be an innovator or an imitator or just completely go off the rail, right? He's an innovator in the sense that he created the Facebook and he created this whole concept of modern social media. He's an imitator in the sense of he recognizes when his entrenched position can go away, right? For example, when Snapchat came out, Snapchat was huge. What did Mark do? He imitated it. He created Instagram stories. Instantly, Instagram stories is very popular. TikTok came in. TikTok was a massive competitive threat. What did Mark do? Imitated it. Instagram Reels, right? And they're both pretty successful products, I would say. And then, you have the third bucket where he recognized that he didn't ultimately control the distribution during Web 2 because he didn't own the physical device. He was at the mercy of Apple or at the mercy of Android, right? So now, because he has this core business that is a beautiful business model that is gushing out cash, he now has the liberty to invest in this big, bold bet. Who knows if it's going to work? I'm definitely not underwriting that in my base case, but he's shown the ability previously that he can make these big bets, and sometimes they work. And I think that's something that I greatly respect about him, and that, he did that with a lot of controversy, right?
So what is your personal perspective on the mark? You said Web3, you work a lot with prompts. Where do you think Web3 goes from here in terms of just overall trends, less so investing?
That's a very interesting question. Are you talking Web3 in the crypto sense, or
Yeah, the crypto
in the
definitely crypto sense, more so to the finances.
More so to the finances. Okay, yeah. So this is definitely something I'm very passionate about. I wouldn't say I'm an expert on all things Web3, but if you think about Web3 in the context of crypto and the financial system, I think our financial system right now is currently just so flawed. And I think the first time that I truly recognized this was when I was studying abroad in Madrid. No, we went to a restaurant, we only had pounds, they only took cash, and they only took euros. So we had to go to an exchange booth, one of those little things that are on the street, try to exchange our pounds. The spread that they charged us was 8%.
Wow.
Why do I need to pay money to use my money, right? It just doesn't make sense at all. And from my perspective, they're adding zero value. All they're doing is they're just exchanging a piece of paper, right? Why should they take 8%? Where I got very interested into this whole crypto Web3 space was in 2022 when I first read about stablecoins and USDC. USDC is a great piece of technology, right? Traditionally in the historical financial system, when you had to create a transaction, you have me, you have my issuing bank, you have the merchant, you have the merchant's acquiring bank, and then you have the card network on top, right? That's 5 different parties. And the reason why you have to pay such high transaction fees on credit cards, 2 to 3%, is because every single person along the way has to take a slice in order to, stay alive as a company.
Right.
What stablecoins do that's very attractive is, like Bitcoin, is peer-to-peer, but you have to think about, okay, what is a product that my grandmother would use? My grandmother would never pay with Bitcoin because it's too volatile. It goes up, it goes down. You have no idea what the value is going to be. Whereas a stablecoin, it comes in and it solves this problem because it tethers itself to the value of the US dollar. So it's something that people are historically familiar with, yet it still cuts out all of those different players. So now, rather than a credit card transaction being 2 to 3%, a stable coin, when you with new layer 2 technologies like Base, which Coinbase creates, you can essentially make that transaction 1 cent. And it's instant rather than 3 days. So I just think it's a huge market, it's a huge opportunity. And whenever you can make something cheaper, faster, safer, more transparent, it's probably going to win.
Well, there's a lot of entrenched forces working against the
Absolutely.
Web3 ecosystem. For specifically, we're going to talk about crypto and Web3, cryptocurrency adoption. But yeah, I mean, you outlined a really interesting case of just very simply, if paper is paper, if money is money, if value is value, to what extent do we need different denominations of it, right?
So we're to slowly close. What keeps you excited about the markets on a day-to-day basis, as it's quite repetitive all the time, but also new things pop up all the time. So despite the noise, the volatility, what keeps you engaged long term?
Yeah, I think the markets are probably one of the most fun things in the world, and investing in particular, because what I think is so beautiful about investing is it gives you an excuse to learn about anything you want in the world, and then you automatically have an outlet to monetize it, right? So say I'm interested in how the waste management ecosystem works, right? Like, how does trash get picked off the streets in New York? Where does it go? What happens to it? I can go ahead and learn about that. And then I can learn about the companies that play in it. And I can learn about all the different service providers that help make those companies power themselves. And then all of a sudden, now I can look at waste management. I can look at Republic Services. I can look at Waste Connections, right? Similarly, maybe someone who's not as interested in weird things like waste management, say you're interested in the Roman Empire, right? You can very much monetize that as well, right? You can analyze the Roman Empire. You can look at it. You can be like, why did the Roman Empire fall? From my perspective, I haven't studied it crazily, but it seems like it fell because they expanded way too much. That killed the democracy. There was no more sense of community and everything fell down, right? Same applies to companies. You have companies that are empire builders that are just expanding for no reason other than to build their own egos. When that happens, all the controls within the company fall, the company culture falls, and ultimately you end up in this cycle of inevitable decline. If you have that insight and you can leverage that and go find a company that mimics the fall of the Roman Empire, you can go and short that company in the market, right? So I just think it's an amazing excuse to just learn about whatever you want and then hopefully make a living off of it.
Awesome. And so a question that, is maybe a bit personal, but I have to ask, right? You've talked a lot about your investing philosophy. You've talked a lot about what has inspired you, but I want to be a bit more forward looking now. What would you like your legacy to be, Max? Not just for any company or any place where you're going to work, but your legacy as a whole.
My legacy, first and foremost, will be to be a great trusted partner to the people that I discuss these stock market investments with and whose money I touch, who I have the privilege to touch. That's number one. I just think there's something very special about someone entrusting with you with what they've built throughout their entire life. That's just a huge stamp and it's an honor. And then I would say the second thing is more personal. I just want to generate the best returns as possible. And specifically, I want to generate better returns than my 4 teachers, which are Peter Lynch, Howard Marks, Warren Buffett, and Phil Fisher. And that's a tall task, but that's how I define my success.
And continuing off of that, what is next for you, Max? Are you working on something? What do you envision yourself, your path to be down the line, maybe 5-10 years down the line?
Yeah. Hopefully looking 10 years down the line, I'll have a successful investment partnership. with people that I really trust, people that are very long term, who are in it for the long haul, who aren't just going to invest, 1 month and take their money out the next month. What I'm really trying to do is compound value over the long term. Ideally, I'm a young guy. I'm 26, about to turn 27. Ideally, I would like to do this until I'm 70 or 80. People with that kind of mindset, who are truly there for the long term, who truly believe in the mission and truly believe in me. If I could have those kinds of partners, that would be fantastic.
And to follow up on that, a lot of our listeners are early founders, but also potential investors in the retail space as well. What advice do you have for those people that are potentially just getting started or already in it, but probably need more guidance?
Absolutely. So I would say your biggest advantage as a retail investor is your time horizon. Why do I say that? It's because institutions are subject to monthly performance. Right. So if you're down a month, you're gonna have to sell something, and it's probably gonna be a bad decision. Whereas a retail investor, you have this perpetual time horizon. How do you capitalize on that without necessarily knowing a million stocks in the market or knowing what's gonna happen? I think it comes back to this concept of how you look at companies. You have your core and you have your growth, right? I think you should always be invested in the market, because if you're not in the market, you're losing your money to inflation. So set a core index or a few indexes as your core, right? That way you're in the market. And then selectively, as you're walking through your everyday life, you notice a problem, you notice something's wrong. You notice that there's this new hot Lululemon competitor that has lines coming out the door and no one's talking about it in the markets, right? If you see no-brainers like that, selectively take your money from the core and allocate it, and selectively allocate it, and selectively allocate it. And don't be in a rush at all, Like, you're not gonna have a great investment idea every month, every year, maybe every even 2 years, right? But as long as you can be selective in investing in what you know in, where you truly have an edge, I think you can be a very successful investor. Another lesson that I learned from Mr. Buffett is that you should imagine that you have a punch card, right? And it only has 20 punches in it. And for every investment you make, you have to stamp one of the punches. And once all of the 20 punches are gone, you're done. You can't invest in anything else. I think if you look through the markets in the same lens as that, you will make very good investment decisions and you will be a very good investor.
Amazing, Max. Thank you so much for sharing all this. I've learned so much. Personally, I think even Leon and I's story is a bit about connecting related to the public markets. Seriously, like related to like the great meme stock days of 2020 and 2021. We would hang out and cook together and discuss our own Robinhood portfolios. And we'll call them portfolios in quotations, because we all know what that entailed back in 2020 and 2021.
Me too. I was on those Reddit threads as well. So.
Love that Wall Street Bets era. We'll talk about that a lot more one day. But in terms of the current era, it is New York Tech Week, and that is what we're here. So could describe your New York Tech Week to us. I don't know if you're participating in it as much as some others are, but yeah.
Yeah, I mean, I've always heard about it, but unfortunately before this, I had to go home to California to see my family. So I actually flew in last night. So this is my first event, but I've seen that there's a good agenda on for the weekend. So I'm excited to attend some events and, hopefully see you guys again this weekend.
Could you at least try to describe your New York Tech Week experience in one word? At least try.
Excited.
Yeah, okay. All right, Max. Well,
And if we could summarize who you are in 10 seconds, or what you're trying to build in 10 seconds.
I would say it's to be a trusted and loyal advisor and teacher to the people who come to me for advice.
That's true. That's amazing. And certainly less than 10 seconds. Awesome. Yep.
And finally, where can people learn and contact you or learn more about what you're going to build, what you are building now? Where can people find you if you want to talk to them?
Yeah, absolutely. You can find me on LinkedIn. My name is Max Juang, MaxJuang, and I look forward to hearing from you.
Thank you, Max. Really appreciate your time today. Yeah, let's keep learning from those 4 teachers and from yourself.
All right.
Thank you.
Thank you, guys. It's a privilege to be here. Appreciate it.
All right. Dude, you